Tuesday. It's Tuesday, the 18th of November, and we're back with another Market Open live stream. It's been an interesting couple of days, and looks like the market is crashing as I predicted earlier in the week, and that's amazing to call another market crash. I have been doing this multiple. This is the second crash that I've called a crash earlier in the year, going into April. Called that crash, and then this in the month of November now I'm calling another crash. All of this is all documented. It's amazing how I'm able to, make these predictions online. Online, have everything documented on both my channels, and still not really get much recognition for it. And then you have all these massive people with massive followings making predictions every couple of months about how the market's going to crash and being wrong over and over again. It's crazy that some people are able to make these predictions back to back and get no recognition for it. Nevertheless, we've gone into New York session. We went into London session with quite an aggressive downward move, which was strange because when I woke up this morning, I actually took a position down here in an attempt to target our liquidity at the highs. This is our Asian session high, and so I wanted to see price rally higher to target this Asian session high, but we had a rejection, and following that rejection I did end up just closing out the position. And so today's going to be interesting because I don't think I'm going to want to participate in the market if we don't have any direct signals. Obviously yesterday what happened is we confirmed the downtrend yesterday, which was right here. Price managed to close below this level, and so after closing below that level, that's a confirmation of the downtrend. And so going into the markets today, I was hoping to try and get positions short, but it seems like, in my opinion, we could potentially see some more of a crash today. And when that occurs, without me having an opportunity to position, it doesn't make it very easy to trade. And so we'll still do our pre-market analysis and see whether or not we can create any trade ideas going into the session, but I don't know, it doesn't look likely. What I will say, however, is obviously if we take a look at some of these levels that we're at, this level here could be seen as an order block, and price could also just ignore that and just continue to trade down aggressively in an attempt to target this level down here. And so if price does come down, most likely outcome is we just continue to trade down aggressively. I mean, we're down nearly 1% and the market hasn't even opened, so yeah, it's not likely that we will see a lot of bulls coming. Let's do our pre-market analysis and let's see what we can create, what potential opportunities we can find going into the session. And just to be clear, these might make me log in again. What's going on? This is an internal server. I'll try again in a few minutes. What does that mean? Bear with me 1 second. Okay, so this does sort of make sense to me, to be honest. So it turns out that Cloudflare is actually down. I think I saw this online, and it's affecting a whole bunch of companies, and that includes TradeZilla. And so I can't do a pre-market analysis if Cloudflare is down. I can't do it on TradeZilla, and so that's unfortunate. What we'll do it in our notes section. We'll do our pre-market analysis in our notes, and then we'll transfer it over. Alright, so we'll do it like this. Do things like this for now. Alright. Oh, this is gonna frustrate me a little bit, but it is what it is. Alright, so from what I've been told, Cloudflare has been down for a little while now, and so yeah, that explains why a few different websites hasn't been working, and so yeah, that's probably the reason as to why that is. Alright, so based on that, we'll do. Why is that still on the screen? I'm not exactly sure what's going on with this. We'll try to resolve that quickly. Seems like we're having a whole bunch of glitching going on today, man. Alright, let's just try it like this. Alright, so US30 market types bullish. That's no longer the case. We're actually in a bearish trend, as you can see, where the market structure shift here at that level confirmed yesterday, and so we're in a bearish trend. And so this is why it's going to be hard to get positioned, especially if the market doesn't give us any opportunities to get short. Sorry. Maybe our best bet might actually just be trying to position for a rebound. And so, yeah, at this current moment in time, we're in a bearish trend. Bearish trend. We're targeting our lows. External liquidity has not yet been taken, no. So we can skip that. We know the market's trending because we're in a bearish trend. Alright, so let's see if we can analyze some of our liquidity for the session. Alright, so first things first, we do have a fair value gap which we've just closed below. After that, we do have this massive gap right underneath it, and so my belief is maybe we just target this level down here. We have liquidity resting here. We also have liquidity resting here, and then we have this liquidity resting here. And if I'm not mistaken, this level of liquidity is actually previous month's lows, and so we'll draw this one slightly wider just so we're aware. Because this is in a fair value gap, we'll actually get rid of that because we don't target liquidity inside fair value gaps. And this is also liquidity from a prior month as well. And so my belief is if the market does continue to go down, if we take a look at the monthly chart, given that we've engulfed already, and we've got about 2 weeks left, or 12 days I should say, my belief is that we just continue to crash lower. The weekly chart's slightly shifted into a bearish trend. You can see the last 4 days from my bearish call, which was on the 13th of November. I called that position into the short and I called it. That's all visible on this channel. However, we do expect price to continue going lower. The question is, how do we get there? And so how do we position to get in there? And so we know we're still in a trending market. We've got a fair value gap below. If we take a look at intra-session, we've got Asian session highs up here. We've got London session highs up here as well. And so we've got both of these levels of liquidity that could potentially be taken. And so the way I'd want to position into that, if I was going to target this level, would be after we see one of these levels down here get targeted, then we'd be able to target liquidity on the upside. And so it's going to be very hard looking to get position today, and that's why I said I don't think I'm going to be wanting to get short in the market on a day like this when we're already down nearly 500 points. Nevertheless, if we keep on moving forward, we've got Asian session highs, as I said. Previous day's highs up here, so that's not good to us. We also have so what I'll do, I'll get rid of this level because we're no longer bullish, and I'll put in this bearish fair value gap. And so if you take a look at where that bearish fair value gap is, it's up here. So what we need to see is we need to see a reason for price to sweep the lows and then target our Asian session high, our London session high, and our Asian session high, which is probably the best trade that we'll get. The only question is when will we get that trade. I also want to get rid of these levels because we're no longer actually in a bullish market, so we don't need to pay attention to any bullish fair value gaps or order blocks, and so we'll only keep our eye on bearish signals. And so yeah, alright, let's carry on with this. Alright, so we've got session highs. We've got session highs above. We've got the hourly and the 4 hour, if I'm not mistaken. Both are in confluence of the overall trend. Both time frames are in confluence with the overall trend. So this is good. That means we can actually trade in the same direction as the market. However, what we need to wait and see is obviously a sweep of liquidity, and so we can't get positioned without having one of these levels targeted. The only thing is when the market's crashing like this, we actually might ignore our levels of liquidity above, and so our model requires liquidity to be swept before we put position short. And so the only trades that we could potentially take today um, would be a sweep, of these highs. And so yeah, it doesn't look like we've got any trade ideas for today. Um, and that's simply because the market is still so aggressive in its sell-off. Unfortunately, um, we'll watch the we'll watch we'll watch the tape going into the session, but I doubt we'll get any trades as the market is just so aggressively bearish right now, and that makes sense. We've just confirmed a double top, and so when we got a close below here, that became a confirmation of the neckline being broken, and so we haven't actually seen any bulls, any opportunities to get short. And so for us to see that, we need to see a massive rally into our intra-session liquidities. If not, the market's just not going to give us an opportunity to. Alright, we'll keep an eye on that regardless anyway. So yeah, I just don't really see any opportunities for price to give us for price to allow us to get short. It just seems like the market's just gonna keep on falling and falling, and yeah, that's however, and because we have unswept liquidity up here, um, I would prefer to target these levels than to actually position short and break the rules of the system. The only problem is um, my ability to get short is limited. I can't get short from here, and I can't I can't get long as well. I wouldn't get long to target these levels of liquidity up here either, because of the depth of this decline. It just seems like the higher time frame is in control, and so it just seems like price is just gonna keep on printing and displacing lower on the higher time frame. And so these kind of situations are relatively frustrating because it doesn't provide you with an opportunity to get short, and it doesn't provide you with an opportunity it doesn't provide you with a decent trade idea. I can't get long when the market's declined 500 points. I can't do it, and so if I can't find an opportunity to get long, and I'm not comfortable getting short without sweeping liquidity, then we just sit on our hands today, and I don't think that's necessarily a bad thing, considering tomorrow we've got minutes, Thursday we've got unemployment rate. Um, maybe, maybe, maybe traders are just gonna want to wait. Just gonna want to wait and see. Just gonna want to wait and see what these results are going forward. And so, yeah, I don't know if I would. I don't know if I would get long here. Um, to target liquidity here. I don't know how I feel about doing that. If I did do that, it would definitely be a fraction of the risk. But that's just trading against the trend, and you don't get short against displacement. That's a bad idea. I mean, you don't get long against bearish displacement. The market indicating that we're spewing lower, and so if we are spewing lower, my guess is we're gonna want to take out all the trendline liquidity here, and that's just gonna look like a crash lower, exactly to the level we predicted. But how much lower is that? And this is why getting short is. This is why when the market crashes, it's difficult to trade, because when you get out of these positions, and the market's about to open in the next 30 seconds, so we'll monitor that. But once you get out of these positions at the highs, it's why it's important to leave trades running. That was my mistake. Once you get out of these positions, it's really hard to get repositioned, especially when the market's spewing lower. And you saw that as well in, or not necessarily here, but you did see that as the market began to decline, it's tough to get positioned lower. Anyway, let's watch and see how the market plays out as we open. Let's see if we get buyers coming. No, we've just collapsed really. Yeah, my guess is this crash just accelerates to the downside. Okay, so this is good. If we were gonna get long to target liquidity up here, it would have to be on the close of a candle like this with a massive wick. Um, I don't know how I feel about getting long in this market. Um, let's have a look if we've got any. Alright, so we do have somewhat of a bullish order block here. I don't know how much of that I want to respect, considering we're not in an uptrend anymore. It's not really relevant. However, we do have liquidity here, and we also have previous days highs and previous days lows right here as well. And so if we can get this candle to close green, maybe we might actually take a long trade. I just don't know how I feel about taking longs in a market crash. It just seems pretty naive. Seems quite naive. Okay, so we established that we're on a bearish market trend and the targets were external lows. You know the market's trending in a downtrend. We've seen a bearish fair value gap above, and we've got session highs as liquidity. Hourly and 4 hour chart is in confluence with the overall trend, both time frames. And so, if we wanted to get short, we want to position as their value gap. Which isn't a bad idea. This could potentially be a trade idea. Yeah, we've already got a green candle print on the hourly and the 4 hour as well. We've got a green here. Alright, so we're going to consider taking this trade, and what we'll do is will completely reduce the risk to a fraction, and so I'd recommend a quarter of the actual position size. So if you was going to risk 1% on this trade, I'd recommend you risking 25% on this, so a quarter of that, 0.25% risk. We're waiting on this position we're waiting on this candle to close to give us the signal. A lot still has to happen, but I guess it's not bad considering you've taken a little bit of liquidity here, taking liquidity here. It just seems naive to try and get long, bro. It just seems so silly to get long, but I guess that's when you have to take these trades. It just seems so silly to try and get long. Alright, so let's talk about this potential trade idea. I'm not yet positioned, but I'm looking to get positioned once this candle closes in the next 4 minutes. So let's talk about what the position is. And we're having issues with TradeZeller today due to Cloudflare, so we'll talk about our pre-market analysis from now. So we know the market's bearish, we're in a bearish bias. We know we're targeting external lows. This is not relevant as we haven't swept liquidity and the market's trending. And so we've got a fair value gap above, and that fair value gap, if we take a look at the daily chart, that fair value gap is this one right here. This is where you'd want to get positioned if you wanted to get short. So that's our fair value gap on the daily chart. And the hourly chart, we've also got important levels of internal liquidity, and that is session highs. And what I mean by that is we've got London session high here, we've got Asian session high here, unswept. And so if we wanted to get short into the market, we want to get short from London session or Asian session high. And so in this position, because the market is so deviated, we can actually take a trade up to our Asian session high, London session or Asian session, either one, and we'll use these as targets now. And so what we're going to do going into the session, going into the close of this candle, is potentially position long into our liquidity. This trade idea is it's got a decent strike rate. However, given the fact we're down, nearly 1%, if I do get long into this position, and this position requires obviously this candle to close green, and reasonably green, not a doji candle, not just a small candle. It has to at least engulf this previous candle. I'd like to see it engulf both of these candles actually. And so if we were to get long into this, you'd want to use a fraction of the risk. I'm recommending a quarter of your actual risk. So if you usually risk 1% per position, I recommend risking a quarter of a percent. And so that's what I'm going to do. I'm going to risk a fraction of my actual risk for this trade idea, simply because we're down nearly 1% into the market open. And so we've got a minute left until the candle closes. So I'm going to get prepared to execute. I execute off my phone. And so you can see right here. Let's have a look if you can see it. You should be able to see. I'm about to get positioned. We've got about a minute left. And so I'm going to prepare to position. We'll risk, yeah, a quarter of the percentage. We don't want to put excessive risk on the table for this trade. Actually, no, we'll risk 0.5%. We'll make it a worthwhile trade at the bare minimum. 0.5% is what I'm gonna risk, and that all depends on how this candle closes. If this candle closes green, we should be in this. And then obviously from our entry, you're gonna risk 100 points, and hopefully there's not a massive decline as well. Alright, got about 20 seconds left. Okay, 15 seconds. Seeing a bit of a give back. Alright, I've gotten long. Let's see if we get any strength in this. Alright, we're starting to see it move, which is always great. These are the toughest trades to take, because you're going against every fibre of your being. You can imagine the market's down nearly 1%, and I'm trying to get long. It was a tough trade idea. Given the rally that we're seeing, I'm already up nearly 1%. I'm already up 1 hour, I should say. Given the rally that we're seeing, what is this level? This is London session. I'm gonna take risk off the table. I don't want to see the market come back down. And so I've just moved my stop loss to break even. And the reason for that is because this level right here is actually this level here is a level that occurred in London session. And so if we see a sweep up here and then price comes back down after bouncing off this order block, then that could be indication of a reversal. And so I've moved my stops to break even because I don't want to experience that. And so yeah, we'll just let the trade play out. I don't know if we'll get all the way up here. Seems like we're already seeing some weakness. Yeah, approaching my stop loss already. Approaching my break even stop loss already. There's just so much selling. It's incredible. Absolutely incredible. Break even. bro. You see, when the market's like this shit, it's actually unbelievable because it's not going to give you an opportunity to get positioned, and that's the most annoying. That's the most annoying aspect of this whole thing. I can't get repositioned. And there we go. We're going back down. The reason I didn't want to sell here is because we could just breach this and continue to our target, and so it doesn't make sense to do that. I don't know how I'm gonna approach this really. I might just not trade today. We could say we tried. I guess some people would say getting short now, well, not exactly now, but at the close of this candle would be a good idea. It wouldn't be the worst idea in the head in the world. It wouldn't be the worst idea. But my issue with that is it feels like excess risk because we haven't actually swept liquidity from London session highs. And so, yeah, I'm not gonna trade today. I'm gonna call it quits. We was up 1R on a buy trade, and I guess we should have just closed that out. The selling continues, guys. The selling continues. Yeah, this is certainly a market crash. All the buying is just met with more selling. And so this was your only opportunity to sell. We didn't even touch the order block. It's quite incredible, isn't it?